or just the fact that every $4,000 increase in the price of gold adds $1 trillion to our treasury, which is massively indebted, my belief is gold will be revalued. And if Trump is on the horse, it will be revalued pegged to constitutional money like gold and silver. If he is the horse, then it's going to be a CBDC just like Klaus Schwab warned us about. If they made it at 142,000 and just arbitrarily set it, all the central banks have been buying it, it would certainly benefit them, now wouldn't it? Immediately our balance sheet is offset completely. It's pristine at 142,000. I'm not saying it's going to happen, but it's something that should be thought about. What if they just let it get to that point? They stop suppressing it.
Central banks worldwide have significantly increased their gold reserves, adding 1,045 tons in 2024, marking a notable shift in international monetary strategy. The National Bank of Poland emerged as a leading purchaser, acquiring 90 tons of gold, while demand remained robust across various emerging market central banks. The trend reflects growing interest in gold as a strategic reserve asset. According to Andy Schectman, CEO of Miles Franklin, central banks are accumulating gold at unprecedented rates and actively repatriating their gold reserves from foreign institutions to domestic vaults. A recent example is the Reserve Bank of India, which brought back 100 metric tons of gold from the Bank of England. India's gold reserves have also grown substantially. When questioned in the Lok Sabha about whether this indicates a move away from the US dollar as the dominant settlement mechanism, Finance Minister Nirmala Sitharaman emphasized that India's increasing gold reserves, including those held by the Reserve Bank of India, are not intended to replace any international currency. Monday saw gold prices surge over 1.5% to reach historic highs, driven by safe haven demand amid escalating global trade tensions. These concerns intensified following U.S. President Donald Trump's announcement of new tariff measures, including a proposed 25% additional tariff on steel and aluminum imports and plans for reciprocal tariffs matching rates imposed by other nations. Looking ahead, Louise Street, senior markets analyst at the World Gold Council, projects continued strong central bank participation in the gold market. In 2025, we expect central banks to remain in the driving seat, she noted, suggesting that the current trend of active gold purchases by central banks will likely persist. Market speculation has emerged regarding potential U.S. executive actions that could impact gold valuations. Schectman suggests that executive action could revalue gold without congressional approval, potentially adding $1 trillion to the Treasury for every $4,000 increase in gold prices. Some analysts have proposed that a revaluation to $142,000 per ounce could theoretically restore balance sheets and eliminate debt, though such scenarios remain highly speculative. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Why would the central banks be buying it at a level the world has never seen? And how about all these banks repatriating? How about the Bank of India just brought back 100 metric tons from the Bank of England? They're holding all their gold now. Why? What does it have to do with? Think about a reset. Think about a reset and how it would manifest itself into establishing trust. Fed has it too. And in fact, it's interesting. Scott Bessent, the new Treasury Secretary, if he gets confirmed, which I'm assuming he will, what's his largest holding? Anyone know? Gold. He has publicly said gold is his largest holding. And all what that would need to be done, as crazy as it sounds, would be for Trump to say to Scott, tell Jerome to revalue gold. No congressional approval needed, and bang, gold is revalued to a level sufficient enough to achieve what he wants to achieve. Now, this is not crazy, y'all. This is not crazy at all. In fact, every $4,000 increase in the price of gold would add $1 trillion free and clear to the Treasury general account. Free and clear. Now, I'm not the only one talking about this. We hear more and more and more people talking about this every single day. People at a much higher level than I am. What if they valued it at $142,000 an ounce? Now, people would say that's impossible, and I agree, it's pretty unlikely, maybe. I mean, Bitcoin's over 100,000. Andy Hoffman, who used to write my newsletter, used to say to me, Andy, you need to buy Bitcoin, it's 400 bucks. I said, you're crazy, Andy, who wants that? I guess I was wrong. I guess a lot of people want it. I guess it's possible. But if they made it at 142,000 and just arbitrarily set it, all the central banks have been buying it, it would certainly benefit them, now wouldn't it? Immediately our balance sheet is offset completely, it's pristine at 142,000. I'm not saying it's going to happen, but it's something that should be thought about. What if they just let it get to that point? They stop suppressing it. None of us know what the real price of gold and silver is. None of us. They have been shorting gold and silver for so long, naked shorting. As an example, let's look at silver. In London right now, they have 800 million ounces on the LBMA, of which only 300 million are unencumbered. 500 million belong to the ETFs. They trade there's between 4 and 6 billion ounces short on paper. 95% are paper contracts. They say they trade 290 million ounces a day of the 300 million float. But they also say that those numbers are 10 times underestimated because they only post the final settlement numbers. That's 2.9 billion ounces a day of silver by these 8 or 9 Western banks, 3.5 times annual global mine supply every single day. Almost 3 times annual global mine supply every single day on COMEX. The prices are distorted. Rehypothecation on COMEX, 700, 800, 900, 1,800, 2,000% rehypothecated. That would mean if 20 of you all hold a contract for delivery and you all stand up to cash it in, if you're lucky, one will get the gold, the rest get cash settled, force majeure. It is a blow up of the system just like that. Could it happen? I bet it will. Don't know when, don't know how. Is it Bank of America? Is it? Ted Butler, God rest his soul, who's no longer with us, said they have 1 billion ounces short silver and between 35 and 45 million ounces short of gold in the OTC market, over the counter. Could it happen? I don't know. You tell me.
Global central banks demonstrated unprecedented appetite for gold in 2024, acquiring 1,045 metric tons valued at approximately $96 billion, according to the World Gold Council's latest Gold Demand Trends report. This substantial accumulation contributed to a record total gold demand of 4,974 tons for the year, despite decreased jewelry consumption due to elevated prices. Poland, India, and Turkey emerged as the primary purchasers, leading what the WGC characterized as an eye-watering pace of acquisition. This robust purchasing activity extends central banks' position as net buyers of gold into their 15th consecutive year, with acquisition rates approximately doubling since the onset of the Ukraine conflict. The acceleration reflects a broader strategic shift as numerous central banks seek to diversify their reserves away from U.S. dollar-denominated assets. Andy Schectman, a market analyst, suggests that central banks gradually accumulate gold while Western financial entities suppress prices. He warns that this could lead to physical gold scarcity and significant price increases, potentially disadvantaging those without physical holdings. Let's get back to the interview.
Gold revaluation. Now, you can't make this up. Every central bank balance sheet on the planet Earth, guess what the name of the account is where they hold gold? Guess. Yes, you got it. The gold revaluation account. That is the name of it. It's held in the gold revaluation account. You have the head of the Dutch National Bank that has been screaming about this for a very long time. Revalue the gold. It's at $35 an ounce on our balance sheet. We cannot, under current laws, offset our liabilities with our gold holdings. And so what if we were to revalue gold to current numbers or even revalue it higher? You have a member of the Bundesbank saying the same thing, and it gets closer to home when we look at Senator Cynthia Lummis from Wyoming, who spoke right after President Trump did at the Bitcoin meeting in Tennessee, who advocated for the strategic Bitcoin reserve. She came up and said, let's revalue the gold held by the Federal Reserve on behalf of the Treasury to a number high enough to use some of the proceeds to pay for the Bitcoin. Or how about Judy Shelton, who I just interviewed? Judy Shelton says to me, Andy, we're going to issue 50-year treasuries redeemable in gold. And we talked about it, she said to me, in Trump's last administration. She was his nominee for the head of the Federal Reserve, who wasn't confirmed, but she'll probably be on the Board of Governors this year. She wants to have 50-year treasuries pegged to gold. She said to me, Andy, I believe he will issue them on July 4th, 2026, which is the 250th year anniversary of the country. And I said, Judy, why haven't they audited the gold held at Fort Knox to the New York Fed? She says, well, it's a lame answer. They say it costs too much money. It's logistically challenged. But that's a bunch of crap, she says. We're the United States of America, for God's sakes. Let's just spend a few $1,000,000 and get it done. I said, damn right, Judy, let's do that. I couldn't agree more. I said, Judy, are they going to revalue the price of gold? Because it is held in the revaluation account. And she, with tremendous articulation and lots of big words, more or less said, yes, it would be in the vested interest of all the central banks to revalue gold, because after all, the most powerful bank on the planet, first and foremost, reclassified gold as a Tier 1 asset. So the Bank of International Settlements does not do things just for the hell of it. Let's get that first and foremost deep in our brain. It's the most powerful bank on the planet. Why wouldn't they make Bitcoin a Tier 1 asset, or SDR, special drawing rights, or something other than gold? Why would the most powerful bank in the world say, by the way, y'all, gold is now a Tier 1 reserve asset, on par with U.S. Treasuries and U.S. dollars? Why not? Because there's something in store for it. That I do believe 100%. And when you see the amount of gold the central banks are buying, it's off the charts. In the month of October and in November, the central banks doubled their 12-month moving average. But they've already been buying more over the last 4 years than anyone has ever seen. But the second part, all these countries, Germany, Austria, Slovakia, Argentina, I can keep going, you can see it for yourself. Every single one of those countries have repatriated their gold from the Bank of England and the New York Fed. Now, the reason they left it there all of these years is because it gave them direct access to the LBMA and to COMEX, the trading hubs, which are losing legitimacy as we speak because they're playing the game of our stupidity of suppressing the price of gold and silver like a bunch of morons. And these contracts all have delivery mechanisms which nobody ever stood for my whole career. They are now, in a manner that is incredibly shrewd. Everyone says, well, why don't they just buy it all up? Because in the United States, instant gratification is not fast enough. No, they play the long game. They drain it, and then they drain it little by little by little by little. Then bang, one day we'll wake up and it's all gone. That's how it's going to happen.
The unprecedented accumulation of precious metals by monetary authorities worldwide signals a transformative period in international reserve management. This strategic repositioning, geopolitical dynamics, and market uncertainties suggest a potential structural shift in the global financial architecture. The implications extend beyond immediate market valuations, potentially reshaping international monetary relationships and reserve currency dynamics in the years ahead. How might this sustained accumulation influence international economic policy coordination? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.